about the minute to 2 minutes, and then we get it started. Go ahead and go live. Cool, cool. We'll give it about 60 seconds to 2 minutes. All right, so we're gonna go ahead and get this started. I appreciate everybody that came and joined. Right, joined a Sunday stream. Sitting here, you could be at dinner doing whatever you guys want to do. You know, out right now drinking whatever it is. Instead, you guys are here trying to learn Sunday night. Right, trying to get some information in. Like I was saying before, this is going to be geared more towards the beginner side of what I deem smart money traders to be, right? Just trying to get that understanding from the bottom up, from the ground up. This is good if right if you feel lost in smart money concepts, anything like that, or you are just completely new to it in general. Like I was saying, Playbit's been growing every day. It's awesome to see new people in here, new faces, right? New profiles, whatever it is, you guys are in here trying to learn. So we're gonna go ahead and kick this off with just the basic question, the startup question, right? This was what I had posted about in the lessons chat, but it's literally what is even smart money concepts. So we'll just put down what is SMC. Put that down. Let's put this, make it a little bit bigger. Put that as 20. Right, just add this little question right here. So what is smart money concepts, right? What is SMC? There are a lot of definitions of it based off of whatever teacher, right? Whatever mentor, whatever person you find it from online, right? But they all kind of point to the same thing. They all point to the same behavior, just like with a lot of different styles, right? With a lot of different styles. So, smart money concepts to me, right? The definition, personally, how I take it, how I've taken it from everything, and how we look to trade, right? Is just from the mind of an institution, from the mind of a hedge fund, from the mind of someone with a lot of money. So, what would be smart money concepts? It would be, if we're going to write down the definition now, right? The belief, right? The belief in one person, one entity, one person slash entity slash one portfolio, right? With more capital, so more money than the rest of the people, right? More money than all of retail. The belief in one person, one entity, one portfolio with more capital than the rest. Than others, and this leads to the manipulation of the uninformed. The uninformed, right? Whenever I say the uninformed or speak of the uninformed, I'm speaking of quote unquote retail traders. When I say quote unquote retail traders, I am saying somebody who does not have a plan. They decide to gamble based off of what they believe the chart is going to move when they go to look at a screen, right? They don't set any type of rules for themselves. They just see one or two things and take that as confirmation and then decide to roll with it. That, right, is not what we want to do. We instead want to create a plan with multiple steps, right, with rules that we can follow every single time, therefore, to allow us, right, that ability to make money like a chop, because that's what we want to sit down and do every single time. So, what is smart money concepts? The belief that there's one person, slash entity slash portfolio. We call this person the composite operator, right? That one person with more capital than others, and this leads to the manipulation of the uninformed. So, understanding that smart money concepts is basically trying to put yourself, right, put your mind in the belief, right, in the shoes of a large entity, in the shoes of a composite operator, in the shoes of a hedge fund. Because as a smart money concepts trader, we understand, right, that there is that one person, that one entity making money, right, capitalizing off of the uninformed, capitalizing off of retail. So if this is how they make their money, right, how can we now replicate that as the retail trader, right? As you're sitting down and trying to analyze a chart, how can I replicate a hedge fund with millions and millions and billions of dollars, right? With this mindset, with this belief, and this is how we can understand now the logic behind certain types of behavior and say, okay, that makes sense, right? This is why this did this thing, or this is why we rated liquidity there. We had to take out early shorts, right? Or take out early longs, whatever it is. But just understanding that what smart money concepts is just the belief that there is manipulation present, right? Within these candlestick charts to capitalize off of the uninformed, then you are completely good, right? That is literally my definition, my personal definition of smart money concepts, right? The belief that there is balance, right? For every buyer, there is a seller. So that's why we see, or you see the saying that says, whenever you go, or you can't go up before you go down, right? Or vice versa. Basing that off of, you can't, right? If there's one person, one entity, one portfolio with more capital than the rest, they have to buy back their own positions, right? They have to buy back a short. So they will have positions that are millions and millions and billions of dollars in drawdown. And what this will lead to, right, is will lead to those liquidity rates, because now they need capital. How else are they going to make their money if there's no one with more money than them, or everybody is less, right? There's no way to capitalize off of anything unless they can target that uninformed liquidity, right? In the form of equal highs, equal lows. And we'll go into that on candlestick charts later. But just understanding that smart money concepts, right, is a belief that there is a composite operator available, and we're looking to follow him, right? We're looking to follow the whale, basically the big money. We're looking for that digital footprint within the candlestick chart. This is how we can now start to get into position. So what is smart money concepts? The belief that there is a composite operator, the belief that there is balance. And with that being said, right, as simple as it is, to keep it as simple as possible, right, we're going to get into market structure now. So this is the question, what is smart money concepts? And this is your answer based off of my personal beliefs and the definitions that I've just given you here. So I'm going to go ahead and get into market structure now, but we're going to talk market structure differently, because we have a lot of traders. I'm not even just going to call anybody out. I'm just going to sit here and say that a lot of belief, right, that market moves like this, where we have a higher high, higher low, higher high, higher low, clean highs, clean lows, right? In what situation, as anybody who is here today has watched a candlestick chart, looked at a candlestick chart, seen a candlestick chart, right, and price has moved like this? Not very often, if at all, right? This doesn't happen where we get this clean price action over and over again, unfortunately, right? Because obviously this would be simple. This would be very, very simple to trade. Anybody could catch on to this type of pattern, right? At the end of the day, if it's just the simple higher high, higher low, higher high, higher low, right, over and over again, as we are moving up. But obviously we understand as traders that the market doesn't really look like this. So we could sit here and say this is theory all day, right? But honestly, if we're looking to get into the logic of how it's going to move, right, we're going to see more situations like this, right, where we get a distribution, price comes down, puts it in the cum, and then a distro again. We start to have an accumulation right here at the bottom, right? This is a bearish market right now. Then we have a reversal, start to move back. we're in these areas right now, mitigating supply, right? Maybe we take out some shorts, come back down over here, and then reaccumulate and move higher, right? And continue. We have more of this type of behavior versus a clean higher high, higher low, right, type of scenario. So if I were to even draw this out, and when you are looking at candlestick charts, I like to draw out the theory a lot, right? So you see something like this, and I'm just looking at, okay, lower high, lower low, right? Lower high, lower low, break a structure, and then we are moving higher, right? And you can get this type of theory. So you can see where these traders come up with this type of theory where it's just lower highs, lower lows, right? But understanding that the market is going to move more in this type of behavior, right? And we're going to have to capitalize off of that in the form of confirmation, right? Structure, supply and demand, and then your confirmation within those areas. With this understatement, understanding that there will be the big money, the digital footprint that's going to enter, and we don't need to enter until that happens, is going to eliminate so much stress in your life, because now you do not have to go to the charts and try to will something that completely isn't there. You don't have to add a bunch of indicators to look for when it actually, right, decides to reverse, or look for when that footprint actually hits. And when I talk about footprint, I'm talking about large impulsive moves that break a structure point. We're talking about market structure as well when we get into it. I'm just giving you a little background, little basis of how that goes, right? But waiting for that footprint is going to allow us that comfortability to enter, right? And then follow that big money, wait for the impulsive move that says, okay, the digital footprint is in, market wants to either reverse or it wants to continue, whichever way you are looking at the charts, right? And then we get that actual reversal. And now that I have waited for all of retail to get either shaken out or get a opposite bias, right, I now have the ability to capitalize off of that liquidity, that uninformed liquidity in the form of equal highs, right? Those stop losses, those retail stop losses, are going to turn into my take profits. So I'll talk about what that means right here in a second as well. So understanding that the market is going to have more of this behavior, right, and just waiting, showing patience until that time comes when that digital footprint hits, is going to be very, very, very important, right, and will help greatly with just patience in general, with discipline, waiting for the trade to actually come into effect, because now I have a solid system that I can follow over and over and over again. And if I lose, right, if I am wrong with my bias, I can go back to the charts and they will tell me, the candlesticks that are present in front of me will tell me exactly why I'm wrong, right? That's the beauty of this type of analysis, and why I like to get into this, or why I've loved this type of analysis, right? But understanding the market moves like this is going to help greatly. So we'll talk market structure now, how I personally simplify market structure, right? And how I can make it as basically simple as possible. So personally, I do externals and internals, right? I have my external structure and my internal structure. We'll talk about the forms of what this structure looks like, right? And then we'll get into some candlestick examples as well. So I have my external and my internal. My external structure, right? We're doing theory over here again. So in a bullish trend, it's going to be higher highs, higher lows, higher highs, higher lows, right? Higher high, higher low, higher high, higher low, higher high, and higher low. This will be my bullish trend, right? I will constantly be looking for higher highs, higher lows. Anything that creates a new high within this situation would be considered a strong low. Why? Because it produced a new high. So I'm looking at all of these as strong lows. So as we are coming up with a bullish trend, right, I'm not looking for these to be broken. If they are broken because they produced a new high, right, that tells me that whatever price action happened within here sponsored a move, right, strong enough to break that strong low that produced a new high. What does that give me now, right? That gives me a new strong high. I can look for a lower high within this area. If I can get that confirmation, then I can take this to the downside if this is broken, right? So as we're coming up, strong low, strong low, strong low, right? I look at strong highs and weak lows, or you can vice versa that statement. It doesn't even matter, right? But it's just those strong and two Strong two little things I'm looking for. This will be a weak high now, another weak high, as the weak high was broken, right? So if this was broken, then I'm looking for the continuation, right? This high did not cause a new low. It did not break that strong low right here. So I am looking for this high to be taken out. It is considered a weak high to me as it did not cause a new low. So we can keep it very simple just by contradicting one another, right? So weak high, weak high, weak high, strong low, strong low, strong low. We have our opposite situation, right, to the downside, where we have our lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? And we're looking at strong highs, right? Strong highs as we're coming down these areas, weak lows, weak lows, weak lows. So we have our strong and our weak, right? Strong literally just means it produced either a new low or high, and then weak is going to say it did not produce a new low or high. That is as simple as it is, right? Keep it as simple as possible. So let's just put that down right now. Produced a new high or low. Nice, it didn't catch my text. So for our strong, it produced a new high or low. And then for our weak, it did not produce a new high or low. So I'm assuming, right, that it is going to be a strong low, and that low is going to be held until I am proven wrong, right? Within a weak scenario, I'm assuming this low is a weak low until I'm proven wrong, right? I'm assuming this is a weak low until I'm proven wrong. I'm proven right, right? And then I'm proven right again. If the reversal were to happen, then I would be proven wrong. And then I would get that very well understatement that I am wrong within my analysis, and I can now flip bias, right? So for our weak, we did not produce a new higher low. So I'm looking for the weak highs and weak lows to be taken out, right? I'm looking for the strong highs and the strong lows to be respected as we are moving up within the trends. Obviously, we can confirm this with lower time frame analysis when we get into those areas, but right now that is what I'm looking for when I'm looking for a strong high or low, right? Or I'm looking for a weak high or low. So within a bullish trend, when I'm creating higher highs and higher lows, my strong lows are going to be present with weak highs. And in a bearish trend, my strong highs are going to be present with weak lows as we are moving down, right? So this is your theory. You have your strong and your weak. And now let's get into a market structure type of deal. So we know that we had a bullish trend. We showed a bearish trend as well. We talked about strong highs and weak lows. Let's talk about now what an actual trend is going to look like within a move, right? A higher time frame to lower time frame move. Whenever I'm marking out market structure, I'm looking at my higher time frames, right? And looking to see apologies, mic died again, but I'm looking to see what I can find as we are moving up or moving down within a certain range on a higher time frame scale, right? Obviously, higher time frames are going to look something similar to this, while lower time frames, we need to understand that we now have internal structure. So we're going to have trends within trends. So if a higher time frame trend is bullish, right? On our down moves, lower time frame trends are going to be bearish, right? This is where it can get confusing and why we go to different time frames for top-down analysis and try to line them all into one, right? We'll talk about what that means in a second as well. But we have our trends within trends, and as we are moving down on certain times, this trend will be bearish, right? On lower time frames, it will be producing lower highs and lower lows as we are moving down. So our job as smart money traders, as institutional traders, right, is to wait for those time frames to be in a line so we can have that full confirmation of an either reversal or continuation and try to take this to the upside or the downside, however the narrative is presented, right? So let's just draw that out this out as red, and we understand that we have trends within trends. So a higher time frame could look bullish, right? But our lower time frames are going to be bearish on a pullback. Now, what does this mean? I'll show you in 1 second. Higher time frames bullish, right? Lower time frames are bearish on pullback. And we'll talk about why this occurs too. We're going to give the logic for everything right here as well. So, higher time frame is bullish, lower time frames are bearish on a pullback. So let's say our higher time frames were making lower highs and lower lows, right? Our lower time frames making lower highs, lower lows, and then we receive that break from now a high that caused a low. So the strong high was broken. Our break of structure is present, right? And then we'll talk about supply and demand as we come into these areas. So now we look something like this, and then we start to shift, right? This is what it's going to look like on a lower time frame scale from bearish, right? Swap to bullish. So we break structure and then we are now swapping to bullish and we are moving to the upside. Now higher time frames is going to look something like this. Right? This is how your higher time frame, let's draw this as black or a different color. But this is how your higher time frame trend is going to look with a simple higher low, right? Higher high, higher low, and continuation. It will look very clean, right? Very simple, but the action within the lower time frames, the trends within trends, is going to be that swap from the bearishness to then the bullishness. What does this do? This creates liquidity on a lower time frame scale, creates a reason to now come up and to continue this higher time frame bullish trend. But we have our trends within trends, and we need to understand this. And how are we going to do some top-down analysis? We'll get into that in a second as well. But as market structure goes, I'm looking for my strong highs, my strong lows, and then I'm looking for the weak highs, weak lows, right? And then I'm looking for my higher time frame trends over my lower time frame trends. So whenever I am marking any chart up and whenever I start it off, right, it's always going to start off with market structure, and I'm always going to go from my higher time frames to my lower time frames. Your higher time frames are going to hold king, right? I'll always start off on either a weekly or a daily scale, and let's just go ahead and draw this out. Call this top-down analysis from our higher time frames to our lower time frames to then our lower time frames. We'll talk about why as well. So with top-down analysis, right, and what the understanding of is our lower time frames are going to make up our higher time frames. So everything that happens on the lower time frames makes up what we see on the higher time frames, right? So everything that happens within this price action, right, was made up from a lower time frame price action, right? Either rates of liquidity, structure, whatever it is, all of that was made up from lower time frames. So from lower time frames to higher time frames, we created the candlesticks that we can print and see right here. How do we reverse engineer that, right? We're going to have to do higher time frames to then lower time frames. We are reverse engineering, right, what made it up, and now from that I can take a daily trend, right? A daily trend that we're in, and bring this all the way down to now a seconds charts. And once all of them are in a line, I now know that everything is now bearish or everything is now bullish, and I can now enter that position and hold for a higher time frame scale, right? That's how this that's how this institutional mindset is going to work, right? Because now that I've waited for all time frames to switch either on bullish or bearish side based off of the institutions that are entering, I now have the ability to make as much capital as they are making, right, on a larger time frame scale, on the way that it's going to move that way. So on our top-down analysis from our higher time frames to lower time frames, higher time frames are going to hold king. We always keep our higher time frame bias in mind when we are looking to take a trade. So let's just go ahead and write this down. Higher time frames are king. Always keep your higher time frame bias in mind.
Flo, when the video's dropping, bro?
Videos.
The course.
Oh, the course. Soon, man. Gotta do a lot of work on it first. A lot of work. I want to make it really professional.
I mean,
Yeah,
we gotta just do it because your sauce is golden right now. Do it right now, and then drop a second course after.
beautiful. I mean, recording these. Nah, I actually really like that. I was gonna think about doing something like this, right, for Playbit and for like the beginners, and have a separate playlist for that as far as
Let
that
me know.
goes.
I got you. You know I'm good
Yeah,
at marketing.
100%, 100%. And then I'll sit down and like edit one, get one edited out, make it very, very simple, very, very clean, right? And then that one will probably be a little bit more public. But yeah, no, I appreciate the offer, brother. I'll definitely be hitting you up. But yeah, still going with this, right? We're talking about market structure, so our higher time frames are king, right? We're always going to keep our higher time frame bias in mind. So our lower time frames, right, might have some crazy, crazy price action. It's going to show something like this, reversals, right, over and over again. And we'll see some type of crazy price action on the lower time frames, but on our higher time frames, we're just looking at something like this, right? Where it's the continuation. So whenever we are doubting ourselves or getting into these situations to where we don't believe we know what we are looking at, right? Scroll out, right? Go to your higher time frames and look at your market structure. Look at what the actual picture is, and now this will help you depict whether you want to enter a trade or not, right? Based off of the data you have pulled. So I look at my higher time frames. And then let's do a quick little understatement of now premium and discount, because this is also something that I use a lot. So premium and discount, the basic understanding of it, right, is we have a 0.5 fib, and I'll show this in a second, but anything in premium is considered expensive to algos. Anything in discount is considered cheap. Algos are algorithms, institutional money, hedge funds, larger people, right? Composite operator, all the same person, same idea that I'm pointing to here. So anything in discount is considered cheap to algos. Now let's talk about what this means, right? Let's say you go to a store, and how I mark this out is with the 0.5 fib, 0, 1, and the 0.5. You don't have to have the 0 and the 1. The 0.5 is really the most important one that I'm looking at. But how this makes sense to us is, let's say you buy a glove, right? Let's say you go to the store and you get a glove, a baseball glove, right? And you buy it in the summer, whatever it is, right? You buy it in the summer and it's $10. And you buy it down here. $10 is right here, right? Let's just pretend this numerical data that is given to us is $10. Now, we wait a couple years or a couple months, and all of a sudden you go back to the website and the price has gone up, right? It's now considered expensive. It's now within premium. Is this a good time to sell our hat, right? Or, sorry, our glove? Yes, it is, right? Because now we are considered expensive. We are now making a profit off of where we originally bought it. Now we wait, right? We have sold our glove. We wait for another year, whatever it is. It's now considered cheap again. Is this a good time, right, to possibly buy another glove, right? Yes, it is, because now we have the ability to now make more profit if the price were to increase, right? So we see the first impulse, and now price is increasing because I have bought another glove now, right? And I can now look to sell that within premium again. So premium is anything above the 0.5 is considered expensive. Anything below the 0.5 is now considered discount. It is considered cheap to algorithms, right? Let's say you bought a house. Do you want to sell that house without any profit, right? No, we want to sell that house when it is considered cheap, or sorry, when it's considered expensive, in premium, right? When prices are in premium, versus buying a house in premium, selling in discount. What did you do? You just bought the top and sold the bottom, right? That's not what we want to do. We want to do the literal opposite of that. We want to buy low, right? Sell high. That's the simple answer of premium and discount, and that is the form of this right here. I will tell you how I plot my premium and discount, and that can be in two ways: from one, the range, and then one, the impulsive move that we receive as well. But understanding our basic premium and discount means expensive, cheap, right? I'm looking to buy in discount, sell in premium, will help us greatly and eliminate a lot of points of interest, right, when we are marking supply and demand, as well as certain areas to look to buy or sell. So higher time frames are your king, right? Always keep your higher time frame bias in mind. Anything in premium is considered expensive to algorithms. Anything in discount is considered cheap to algorithms, right? So now let's talk about how I'm going to mark that range and how I'm going to get the start of that range, right? So whenever I'm going to the charts, going to look to find a certain play, really, or look to get into this information, see if I can understand where I'm at, right? I look for a large impulsive move that broke structure. So it was a strong low or a strong high, right? That was broken with impulse, right? With imbalance, and we'll talk about imbalance as well. So with imbalance, meaning it is a reason to come back to, right? It's leaving a reason to come back to. We'll talk about that in 1 second. But it's a large impulsive move that broke structure with an imbalance, right? Leaving a reason to come back. Once that is created and once that high and low is formed, right, that's when I'll draw that premium and discount range and we'll look to get into a trade. So I'm looking for, right, price making a trend, breaking that trend, right, and then I'm looking to draw now my area to look to possibly buy or sell based off of the range. So once that large impulsive move occurs, right, that breaks that high that caused that low. So we broke now the structure point to the upside, right? There's your break of structure. Price moves up, and we have a trend shift. Now we look to ourselves and we say, okay, as an algorithm, as a hedge fund, as an institution, are we going to be buying in premium or buying in discount, right? Discount. So this now eliminates a bunch of POIs that I have from here, 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 here. And as well gets us into where larger money is getting into trades. Now, what does this mean? As a retail trader, right, I could be looking at this certain situation like this, or even, right, whatever it is, as we're coming up into these areas, once we break structure and show that, as a retail trader, right, I have, there's breakout traders, right? And then there are traders that are setting limits. So as a breakout trader, you are setting positions, right, at this high and saying once it breaks that structure point, I'm going to run a trailing stop on it, whatever it is. Once that happens, right, and we're going to continue to take this to the upside. So they start to set their stop losses at lows underneath here, right, as we are breaking structure. Remember, this is a higher time frame scale, okay? So they are setting stop losses at the lows. What does that do? That creates liquidity, right, in the form of sell side liquidity, as long positions, people who are trying to take it to the upside, have to sell their positions to stop out, right? So once that move is occurring and they get that breakout, right, there's now a lot of liquidity that is opened up within the market in the form of pending orders, right, in the form of active market orders as well. Once that break of structure occurs, right, people watching the charts, whatever it is, and then they start to see that move away. So maybe they made a little bit of money on this move up, great. If they didn't, not great, right? But doesn't matter to us. We're looking for that area in discount. So on the lower time frames, we are after we get our higher time frame break of structure, right, and we're on the lower time frames now, monitoring the pullback, looking for that area to where we can possibly take this to next. We'll look for what sponsored this move, what sponsored this break of structure to the upside, right? Obviously some price action, something within here showed that break of structure to the upside. So we'll go to the lower time frames, right, and we'll look for now that same exact behavior, and we'll say, okay, it was showing that right here. We broke structure once, right, and then we introduced demand on a large impulsive move, right, after a liquidity raid. and we'll draw this out as red. So our lower time frames are looking like this, and then we get a break of structure that leaves an impulsive move with imbalance, and I now have a demand zone, right, to look to possibly get into. Yes, there will be lower time frame demand on this move up here, but I'm looking for the one in discount that sponsored this move to the upside, right? So I'm not buying what is considered expensive. Instead, I want to buy what's considered cheap, right? So after that break of structure occurs, and we'll take this away right here to show that demand zone after that move, that sponsored, right, that break of structure to the upside, I can now look to get into trades once all that retail liquidity, all the forms of equal lows, right, from the relative push to the upside after this first break of structure, breakout traders, whatever it is, pattern traders, doesn't matter, right? The importance is that it created sell-side liquidity, created equal lows, created uninformed retail that are trying to continue to take this to the upside, because for some reason, as a retail trader, as a human mindset, right, we go to the charts and we look at it based off of what we assume is gravity, right? We assume if this just breaks to the downside, it can just keep going. When that isn't the case, right? We have to, or for every buyer, there is a seller, right? We have to balance out the market. It wouldn't continue, right, to move or change price or be a similar price if it was the same thing, meaning it would literally just move up forever, right? We would just look like this if there was no uninformed retail liquidity, or there was no way to make money within the market, or the asset would continuously move like this to the downside, right? And no one would make money on that upside. So understanding that there is every buyer or seller, and there will always be, as long as there is always some form of human liquidity, human mindset within these scenarios, right? As long as there's always some form of human thought, human belief in these scenarios, because that's going to bring now human manipulation, mindset manipulation, right? If this was all algorithms, all bots, then it would do the same thing over and over and over and over again, right? And this, it does. And we'll show this, what this means from higher time frames to lower time frames in a second with candlestick charts, but let's just look at the behavior right now, right? We get that break of structure. Retail is in trades, trying to take this to the upside continuously, right? We're waiting for now the purge of those late longs, that are trying to get into trades, right? What happens? They are purged, so those equal lows are taken out. We are now in discount. It is now considered cheap to algorithms, a part of a bullish trend as well. I can look for my lower time frame confirmation, and then I can enter, right, a long position right here, much lower with a lot less risk, right? Versus entering this position to the upside right here and holding for a strong low over here, or even this demand zone right here after the reaction occurs, right? Just because I'm utilizing patience, waiting for it to come into those areas that sponsored a higher time frame move to the upside within this certain scenario, right? I now can make money along with the higher time frame scale and the higher time frame narrative and that composite operator, right? That larger money, meaning this move, right, inherently is a lot less than this entire move right here, right? We technically caught the whole move on this move right here. Now, this is all just theory. I'm not saying this happens every single time. The most confirmed ones will actually be on like breakouts like this, right? Because now I can set my stops on seconds charts as we're continuing to break to the upside, put in a larger margin, and for that make a lot more in a lot less time, right? But just understanding the theory of it, we are coming to the downside when we come into these areas, coming into discount, so it is now cheap to algorithms, right? Cheap to the higher time frame money, cheap to the composite operator. We are now in a bullish narrative as well, right? That structure shift has occurred, and I can now look to enter within my demand zone on lower time frame confirmation and target my higher time frame scale, right? So I just look for the large impulsive move that broke structure with imbalance, and we'll talk about imbalance as well, right? And then I look for now my premium and discount within, and then look to enter a trade that way. So keep it as simple as possible. It's a lot, right? There are a lot of smart money traders, YouTube videos, people out there that give you a lot of names. They give you a lot of setups. They give you a lot of this and that, and they try to make it shine, right? I'm not here to make it shine. I'm here to give you the behavior so you can understand how the market actually moves, right? Because at the end of the day, it does not matter to me what it is called, how it is named, anything like this, if I'm not making money, right? If you're not making money, it's not going to matter to you. So If we understand the behavior and how the chart actually moves, then that's going to bring a lot of less stress, right? A lot more confidence and the ability to now independently trade, right? And that's the entire point of these lessons is for independent trading, right? So understanding that we have our top-down analysis, always keep our higher time frames in mind. They are king, right? We always have to have that bias in mind. So if I am trading on lower time frames and I'm running a counter trend to my higher time frame, I need to have relative take profits at certain areas, meaning I'm not holding for the higher time frame scale if I am counter trend, right? And I haven't done all the work up until that point. If I'm on a 1 minute chart trying to take a long to the upside, right? But my higher time frame is very, very bearish, then this 1 minute move, right? This 1 minute impulse or break of structure, whatever you want to call this, can be completely trumped on a 15-minute move like this, right? Or the minute move like this, because our higher time frames are in a bearish bias. Just because our lower time frames are showing a bullish type of scenario, we haven't done the work from our higher time frames, daily, 4 hour, 1 hour, right? 15-minute, 5-minute, 1 minute, and then our lower time frames to get every single time frame in scale, in harmony, and sync with each other, right? One impulsive move is going to change an entire narrative if we do not have all of those within place. Meaning one impulsive move to the downside, right, is going to continue now our higher time frame scale. This move to the upside on a 1 minute chart, if we're on a 15-minute bearish narrative, right, is not going to be very, very significant. We need to keep our higher time frames in mind as that will be trumped, right? Always, always. And then now anything in premium is considered expensive, like we talked about. Anything in discount is considered cheap. So we want to buy in discount and we want to sell in premium. For a market structure now scenario and a market structure scale, we'll draw out this and then we'll draw a small trend. So we are doing an uptrend. This is all theory. Obviously, price does not move like this. We want it to show that type of movement, right? Obviously, but that is not going to occur. Lower time frames are going to have a lot of accumulations, reaccumulations, and this is why we'll show the candlestick charts in a second here, but then we'll have the distributions, right, as we're coming up into these areas. But if we compare all of this ability to now one chart, right, one scenario, and have a step-by-step process, then we can check off certain boxes, right? I can check off this box, I can check off this box, I can check off this box, and once all those boxes are checked off, right, I now have my rules. They're good to go. I can hold my trade for a higher time frame scale. I can enter and I can walk away. If I was wrong, then a chart will tell me why. So looking at this, right, we're coming up, making higher highs, higher lows, higher highs, higher lows. We have a weak low that is presented. We have a break of structure that occurs. I can now look for my lower high and look to take this to the downside. How is this going to follow with our premium and discount narrative, right? So price came up here, right? And we have this range that is occurring. Actually, let's draw our range from here. So this is what the lower time frames are going to look like. Our higher time frames are going to look something like this. Continuation, right? Let's draw this out as black. Do this a little bit thicker as well. And now I'll draw my range like this. So my impulsive move, right, that broke structure to the downside on a higher time frame scale is shown here, right? This large move to the downside. There's a lot of imbalances occurring within it, a lot of reasoning for price to travel back into these areas, fill those orders that weren't filled in the form of those imbalances, as well as supply and demand, right? Go back to the areas that sponsored this move to the downside, because that's where that big money entered, right? So if they entered positions over here, if big money entered positions here, right, and they're making money on this move to the downside, once they start to take profits is when we see that reversal. So they begin to take profits, right? It starts to reverse to the upside. What does this do? This gets retail in long positions, longing it, leaving their stop losses underneath these lows, right? continuing to leave their stop losses underneath these lows because they say, I caught a bottom, I caught a bottom, I caught a bottom, I caught a bottom. We do not care for catching bottoms or tops as smart money traders. We want continuations more than we do reversals, if I'm going to be completely honest. Why? Because that is going to be where we will make the most capital and where I can put the most margin into a trade, because I can risk a lot less pips on a screen, right? I can risk way less pips on a screen catching it up here, right, in the middle of this price action than I can right here or right here, putting stop losses underneath these lows, right? My R&R will be increased, and for that I will have to have less margin available within this certain position here, right? So if I am big money and I enter positions over here, right, I enter positions to the downside right here, and I'm pushing price, right? We're pushing price to the downside, and then I decide to start taking profits at these areas, right? This now gives that ability for price to start moving back into where I originally had my orders, right? Over here, we're going to have imbalance, so there will be no filled orders within this move right here. So once price is coming up to this area, right, this available area, I fill now those old unfilled orders that were filled before, or that were unfilled, right? And I now have more money in this downside position. And what do we see? The continuation, as well as a reason, right? With structural liquidity, a reason to continue to the downside. So what do we see? I literally have this charged for like 2 hours. I have no idea why this does this. Very annoying. Apologies, but I'm just gonna buy a new mic. I'm done with this. But price is moving down, right? I enter my positions as a higher time frame composite operator. I'm putting myself in the shoes. I'm putting myself in that mind. I enter positions over here. Price moves to the downside right here, and then as it is starting to climb back, as I'm starting to take profits, once I come back to where I originally bought, right, or originally sold within this scenario, I now put more money in, right? I enter again. Now this was where that scaling in comes in, and you can now start to relate this, right, to averaging in, right? When we average, we want to have the lowest average price possible if we are trying to take this to the upside, right? Highest average price possible if we're trying to take this to the downside. This is how that works from an institutional perspective, right? So utilizing premium and discount now gives us the ability to take away all of that noise, as well as find certain areas, right, with imbalance that sponsored this higher time frame move to the downside. So I now don't have to worry, right, about supply zone right here, or right, supply zone right here, whatever it is, when I'm continuously trying to take this to the downside, right? If I shorting this, right? And then I'm now stopped out, and then it goes my way. And I'm like, well, I had the right market structure on the higher time frame scale. What was the issue, right? Did your internal structure shift yet, right? Were you in premium? None of those things had occurred yet. Price was still making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? As we're coming up, once we create that lower low now and show that structural shift, now my lower time frame bias is in harmony now with my higher time frame bearish narrative. So now that I have that break of structure to the downside here, I now have a supply zone that will hold as supply to enter, and then now I can target that higher time frame weak low that was put in right here, right? So we have to keep it simple and utilize patience, because all of this structural liquidity as we're moving up into these areas is retail, is uninformed money trying to catch a bottom or trying to catch a top, whatever it is, right? So let's get rid of this. Let's get rid of these as well. Draw this out like this, see if it'll let me delete those. Perfect. All right, so waiting for us to come into premium now, where that big money entered, right? Waiting for that show of hand, which is the form of that break of structure with displacement, right? Here's our next show of hand after we come into those areas and mitigate those areas. Waiting for this to occur is going to eliminate a lot of stress. It is going to increase profitability, and it is going to increase the amount of time that you make this profitability in. Meaning, right, because I have waited all of this time for this entire move to come to the upside right here, once this structure break occurs and I now have my setup, right, with my supply zone, my confirmation within that area, right, I now can set my stops to break even on a break of this low. Why? Why am I setting my stops to break even on a break of this low? Because my lower time frame scale is now within my higher time frame narrative, which is bearish, right? Which is bearish. So now that we have broken that low and showed that impulse, right? Showed that move into these areas, I set my stops to break even. Because what happens now that this strong high has been put in place? I don't want that to be broken because that puts in a break of structure, and now my narrative has shifted, right? So this is how we can get into areas where once this occurs in minutes, right? Seconds, I'm now break even within minutes, seconds, and I can walk away from the chart and let this go because I know that if I set my stops to break even or protect myself after I get that new low that's created, right? Then if that were to be broken, then my entire narrative would shift. And I now have another narrative, right? As well as I'm protecting myself within these scenarios. I'm not going to get stopped out because once this happens, these areas are protected. These are the strong highs within this area, within this trade, because you now have entry here, right? From algorithmic money. And then you have that second entry, that second push, that move away from all of price where they're making most of their money. So as we're coming up into these areas, creating that retail liquidity, we're waiting for the show of hand. The show of hand is shown, right, in the structural shift with displacement. The same thing we saw here mentioned, the same thing that happened on the higher time frames, we're looking for on the lower time frames, okay? Same exact behavior, but utilizing our higher time frames to lower time frames, waiting for our lower time frames to shift is going to bring much, much more profitability, much, much more confidence, and it's going to bring more patience as well. So understanding that we have to wait for these certain trades, wait for these certain scenarios, and wait for this certain behavior to develop is probably going to be the hardest part. That is literally probably going to be the hardest part as a new smart money trader. It was for me, right? It was literally staying patient, because I would go on the lower time frames and see this happen over and over again. But my higher time frames weren't in harmony yet, right? I still needed to show that patience, wait for that structure to form, because I couldn't will it to move this way. We have to wait for that wave to appear, right? If I literally mentioned this almost every single stream, but I'm going to say it again, is if I'm a surfer trying to surf and I take my surfboard out to the waves, right? I take it out to the beach and there's no waves. Can I surf? You literally cannot surf. It would be stupid to try to go and surf if there are no waves present. It would be stupid to enter a trade if there are no footprints, no waves present, right? It would be stupid to enter within this scenario, trying to take this to the downside, if that show of hand, if that wave is present. I can't surf until that wave is presented, right? I cannot enter until that behavior is presented, that displacement, that footprint, because now I have the ability to protect myself, and price should not move back to this area and instead follow that higher time frame scale. And now that it is put in a lower low, right, the lower high will come next, and then we'll see that continuation, right? That's where that beauty comes from, and that's where we want to enter these certain type of scenarios, because now I have the ability to disprove myself. Because let's say it did do this, right? Gives you the structural narrative. We go for the week low. You have your first take profit, right, on the lower time frame scale from this move to the downside right here. Price pushes up, and then you get your first take profit from this weak low that is presented right here, right? And now price moves down, and then it starts to move up, and then you do break structure. You had your take profit, right? You made your money on this move right here, whatever it was, doesn't matter, but price breaks that structure point, right? You're stopped at break even, but now it's broken, right? With impulse. What can I do now? I can look for that next demand, right? I can look for that next area to buy, because now I have disproven my bearish thesis. I have disproven my bearish narrative. And now that my higher time frames have shown a possible reversal instead of the continuation, right? I now have the ability to look for supply higher within this entire move. So this will show you where certain areas, right, are going to be respected based off of lower time frame structure. Because if I have a supply zone right here, it comes up into this area, and then it shows this, and instead breaks structure to the upside, I can now look for a supply zone higher, because my lower time frames are not within my higher time frame bearish bias quite yet. So once it starts to move up into these areas higher, so let's just draw this out like this, right? Up into this supply zone higher, I wait now again for that same structural narrative. So if I receive it, right, if I receive that break of structure with displacement, I can look for the lower high and look to take this to the downside, right, within these areas right here. Or if my higher time frame scale shows this, right, we come into the supply zone, do some type of action like this, start to move down a little bit lower, and then break that. What do I have? A higher time frame break of structure, right? I can now flip this narrative and use this move to the upside right here as my impulsive move, my next range. I can look for unmitigated supply and demand within this area, right? And now I can look to confirm that on the lower time frames. So this ability to utilize patience now gives us so much more profitability opportunity due to the fact, right, that we can disprove ourselves within minutes. I can disprove myself within minutes on this trade right here because either we get this move to the downside, right, or this is just theory as far as minutes go. But I mean, we can disprove it very, very quickly within that same structural narrative, right? Almost right away. The reasoning from this is because I can wait for these areas to be validated, right, as strong highs or lows. If it comes into this supply zone and respects this strong high that caused a strong low and breaks structure to the downside, right, I can look for that trade to the downside. If it does not and breaks the strong high, I have a next strong low, right? And then now I have a trend shift, right? And now I can look for the confirmation of that trend shift. So this is where we can, again, have more profitability opportunity just by allowing ourselves to maintain patience, right? To hold that patience. So personally, I go from the higher time frames to the lower time frames. I'm going to draw my own infographic. I send out the photon one a lot, but for the structural confirmations that I'm looking for every single time when I go into the trades, right? But what it is just I'm looking for my weekly trend, right? And then we can find our daily trend within that. We can find our 4-hour trend within that. We can find our hourly trend within that. And this doesn't have to be applied like this every single time. Meaning if I am just using or trying to find an intraday trade, right, I can find an hourly range and play 15-minute structure with 5-minute confirmation, right? Also keeping my higher time frames in mind, my higher time frame trend, my higher time frame bias in mind. So allowing us to show that type of structural narrative, to show those rules over and over again, and to wait for that show of hand over and over again is going to allow us much more comfortability, much more confidence as well, because now it's the same thing I'm looking for over and over again. And what does that pattern, that recognition bring, right? That's going to bring that confidence. That's going to bring, oh, I've seen this before, right? I made money on this before. I'm going to enter again. Here we go, right? Entering the trade. And if you're wrong, you'll go see why. Did it show the structural impulse? Maybe it did, maybe it didn't, right? That's when you can go look and start to now find your style and actually hone it down, because now you have things that you can call out that are wrong about your style, or things that can call out that you did right? And let's say, okay, do this every single time. But just understanding that this mechanical type rule-based system through the lens of a hedge fund or through the lens of a composite operator is going to allow for much more confidence and profitability in a lot less time, right? We'll go show the candlesticks in 1 second. That's what I'm going to do right now. But looking at this, right, everything that we had talked about, one of the biggest things with smart money concepts is going to be patience and keeping it simple, because it is probably one of the easiest things to do is to overcomplicate it, right? I overcomplicate it a lot. A lot of people overcomplicate it with all these fancy terms, everything that it is, but understanding the behavior at the end of the day, that we're just looking for that digital footprint, looking for that entry of big money, and then looking for where to follow, right? We're looking to follow that big money, understanding that that is literally the epitome and the most basic definition that there is going to bring a lot less stress, right? Because now I don't have to have this definition, this definition, this definition, this definition to enter a trade, right? It's just the behavior. Oh, I've seen that before. Market is behaving this way. I can enter, right? And then target appropriately. So top-down analysis, higher time frames are king. Trends within trends. Anything in premium is considered expensive. Anything in discount is considered cheap. And we're looking for that large impulsive move that broke structure with imbalance. So we're going to do a quick example on the candlestick charts here right now. And then let me just go ahead and clear everything that we have. But we'll show a quick example. Get rid of this alert as well. on lower time frames, or sorry, higher time frames with replay mode. Right here on what this looks like within this certain range over here. Right, and then we'll talk about how we can actually apply this now. So I'm looking for that large impulsive move, right, that broke structure on a higher time frame scale and left imbalance. Imbalance is whenever you have 3 candlesticks, 2 candlesticks, whatever it is. Let's just draw out the candlesticks real quick. And because they were moving so quickly, right, because price was pushing so quickly in a certain way, we have certain wicks that were created, right, on the downside right here, upside right here. I have a wick to the downside right here. And then I get strong candle closures, right? And then I don't have clean wicks into these areas right here. So price is being taken care of, right? We can see that we are wicking into these areas over and over again. All this area, all this price action was taken care of to the upside and to the downside. But leaving that area of imbalance, now from this move to the upside, is an area of unfilled orders that were not filled, right? So if I have an impulsive break of structure, leaving orders that were not filled, and then I wait for my lower time frames to switch, right? Now I have confirmation. So we can see where everything starts to come together, right? We can see where this behavior starts to take place. We have about 5 more minutes or so. We're a little bit over actually, but I just wanted to show you guys this quick example on the lower time frames, what this looks like, right? So on this move to the downside right here, on our higher time frame scale, we are bearish. Yes, we had a large break of structure to the downside with imbalance, right? Here's the imbalance. Let me just go ahead and point it out for you guys from this wick here to this wick here. An area of unfilled orders to look for a price to possibly come back into, right, to fill those orders and either continue or put in a reversal. When we are looking at imbalances, quote unquote, fair value gaps, quote unquote, gaps, right, whatever it is, I understand them as areas that can eventually be filled, right, but we're not going to look at them as just simple reversals over and over again, or once it's filled, it's going to reverse, right? That's not exactly how it works. It's just an area that is going to be eventually filled, and then we can use structural narrative as well as Wyckoff, right, and lower time frame confirmations when coming into those areas. But we have our impulsive move, right, that breaks structure. All right, let's go to my lower time frames. Or sorry, from the daily to the 4 hour. We are bearish, right, on the daily. We're still bearish on the 4 hours. So if I go ahead and draw out my trend, right, I have a low, high, lower low, lower high, lower low, lower high, lower low, right? My 4 hour is showing that bearish narrative on top of my daily bearish narrative, right, from that break of structure to the downside. So it just looks like one move, right? But we saw the lower high and the lower low on lower time frames within this price action right here, right? So this is how we can start to see those trends within trends. So now let me go ahead and draw out my premium and discount from the highest high that caused the lowest low after a liquidity raid to the upside. So we saw a liquidity raid to the upside right here from these equal highs. Price came into this area, respected this supply zone, and then we broke structure to the downside. So the sponsorship of that came from this move to the upside right here. Now I can draw this to the downside right here, and I now have this area of premium and discount where price can, where I can look to buy and discount if the structural narrative is showing, right? And I can look to sell and premium if the structural narrative is showing. So let's go ahead and watch this play out now. All right, we receive an impulsive move to the upside right here. So now that that structure break has occurred from a high that caused a new low, right, I'm looking for that area of imbalance for price to come back into that sponsored that move to the upside from this high to this low right here. All right, we can see price comes into that area of imbalance. We talked about early retail as well, right? They are all longing this move to the upside right here, putting their stop losses underneath these lows, and then once they are stopped out, they start to get into short positions, right? They start to flip. So let's look at this right here. This is where it gets very confusing for retail, right? Let's draw this out, right? They're long, 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 putting their stop losses underneath lows, right? Lows right here, lows right here, lows right here, over and over again, right? Trying to continually take this to the upside because they believe, right, that price moves that way. So within this move right here to the upside, so let's draw this out like this, apologies. They're buying, 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 right? putting their stop losses underneath these lows. Now let's take these out. Over and over and over, right? Putting stop losses underneath these lows, trying to continuously take this to the upside. We're looking for the sponsorship that occurred, right, from this low to this high. Okay, so we're looking for now that structure shift. We're looking for the next higher low, for the next continuation to the upside, right? Everything that we have been talking about. So let's take this off, this as well, draw this off as well, right? And now that the late longs are going to get purged out of their trades, now that they are taken out and that liquidity has been opened up within the market, that now gives the ability for your big money, right, your composite operator to enter positions, put more money into this trade after taking profits on this original move to the upside right here. And now that they are in that trade right there that we had talked about, right, within discount of this impulsive move from this break of structure, look, we can see where everything is coming together now. This it shows up on the candlestick charts, and go look at this for yourself, right? Because that's where you're going to actually learn, is by going back into these charts, going back and back testing and doing what we're doing right here, right? Everything that we are talking about coming to light as we break structure, come down into discount, what sponsored the move, take out the late longs, right? And we introduce new demand within these areas right here. So if we get into a trade right here, right, a long position right here, where can we expect or possibly take this to the upside, right, after that demand mitigation down here? Right? Within premium, again, within a supply zone where imbalance occurs. So I'm looking at this saying, okay, now we have a large move to the downside over here. Apologies. I have a large move to the downside right here, right? I'm looking for the imbalance, everything within that. Where's my supply and demand? We see an imbalance right here, so we say, okay, price could come back to this area, fill those orders. Now that I have a bearish structural shift, my 4-hour has switched bullish, telling me a daily pullback, right, is in place. Where did my daily structure break? Oh, over here. Okay, I see this wick as well. It's area of supply. So we can say, okay, this entire area holds an area of supply. We'll talk about why we're doing the wick in a second. But on our lower time frames, look at the zone, right? Multiple areas show the same structural narrative. So I can now say, okay, I can look at this as a supply zone, that candle before that candle that showed that large impulse to the downside, and take profits within premium within this area right here. Let's go ahead and play this out. Right? We are showing that structural shift now, coming into now premium of our entire trend, right? Coming into premium. And we have been in our structural shift right here, right? We're in our trade down here. We come into premium of this entire move. And now that we have gone into premium, right, rated highs as well, we are now out of our trade from the bottom, right? Let's just draw this over here, draw this to the side. Now that all the shorts are out of their trades, long positions have gotten into their trades, and let's look at this right here too. Right? Broke out of the 200 EMA. We understand that we're in premium. We're in an overall bearish structural narrative. So we created a lower low, lower high, lower low. We're looking for another lower high for the continuation, right? We know that we're in an overall bearish narrative. Retail sees this as a breakout to the upside, a 4-hour 200 EMA breakout, right? Look at the downtrend. How many retail traders are going to look at this and say, price has been underneath the EMA for 65 days, for 2 months. We've been underneath the 200 EMA. This is the first breakout. How many people do you think are getting into this trade right here, trying to take this to the upside and trying to continuously take this out, right? Let's look at a trend line. Same exact thing. Trend line breakout to the upside. Where's the retail liquidity present? Boom, right? Right there, right? It's visual now. You guys can see it happen on a chart. So now that they look at this and say it's been a 65-day downtrend, we broke that structure point to the upside. We're gonna moon, right? Basically, we are understanding we are still looking for that lower high in the continuation. We're looking for that area of supply. We took our profits at our certain area. What happens? Right? We get that break of structure to the downside. what happens? Retail is manipulated over and over again, right? We understand that we're in premium, so we're expecting price to break structure to the downside. Once that is given, right, then we can confirm that with our lower time frames. Again, comes up into the area, breaks structure to the downside. Where's your impulsive move? That show of hand, right? There's your next show of hand. Where's that supply zone that sponsored that move to the downside? Boom, right? There's your supply zone. Price comes down, makes a lower high. Continuation to the downside, lower time frame continuation, right? It's not very surprising to us in this area of premium with the structural narrative that has been given to us. But retail is looking at this and saying, oh my goodness, breakout to the upside, right? They're giving reasons for price to come to the downside, which is crazy. It's very, very opposite as far as retail goes. But that is just that quick example that I wanted to show you guys. Obviously, on lower time frames, we'll do a lot more analysis and confirmation when coming into these areas. But I don't want to overload you guys with a lot of these terms, a lot of these scenarios, or anything that's coming out. I just want to show you the behavior of what is occurring. And as far as what I'm looking for, that's literally it, right? Keep it as simple as possible. All we're doing is following that composite operator. All we're doing is following that big money. If there's anybody who has any questions or anything like that, feel free to either unmute your mic and ask now, or you can @me in chat. I'm going to look for mentions right now. I don't believe there are any, which is perfectly fine. If you have questions, you can always DM me or ask anytime in chat, chart chat, whatever it is. But I'll leave like a minute or two for that. I'm going to clean up this chart real quick, and then after that we can go ahead and end this stream right here. So let's get rid of these. Give you guys some time to go ahead and do that right now. But simplification is going to be your friend as far as these smart money concepts go. And that's why obviously I'm here trying to help you guys out and do these beginner ones, right? To get you guys in that mentality and to understand what is actually happening. Of course, Sir Trade's Law, always brother. I appreciate you guys' support and feedback as well. That's what keeps me going. Whenever we're streaming, right? I don't want to just sit here and ramble to you guys, ramble nonsense that makes literally no sense. Why are you even here, right? How is that supposed to do anything as far as having that structural narrative, right? Knowing what you're actually getting into, utilizing that patience over everything. Kos was saying continuations more than reversals. Yes, sir, exactly. How many times, right? How much more money am I going to make within less time catching a long position on a move right here, on a literal up candle, right? Right away, up candle. And I can set stop losses underneath lower time frame lows like this, right? 30 to 1 within an hour, 2 hours, right? Versus catching this bottom down here, even if I caught this bottom down here, right? On a higher time frame demand zone, if it was something like that, whatever it is, I had to wait roughly 2 to 3 times the amount of time to even set my stops to break even, right? As well as if I wanted to make what I just made on this move to the upside right here, we're talking about a much larger, higher time frame scale, right? This is a literal 89 to 1, okay? We'll just show this 89 to 1 right here. Obviously, this is realistic on lower time frames if you were to do this type of analysis. But literally, I mean, look at how far I'm scrolling right now. We're in the 6,000s, right? And we're not even, okay, we're now halfway to the profitability that we could have made within this trade right here. We are now halfway. Look how much more, look at the move that has to occur, right, to make the amount of money we made on this move right here. This is what I'm talking about. I don't care about catching this bottom. Who cares about this reversal? If I can catch it up here after the entire breakout of that range, then I can make much less and much more in much less time, right? That's the whole point of these smart money concepts, and that's why I wait for so long, and that's why I utilize patience as much as I do. But I appreciate you, Kos. I appreciate everybody that is in here, everybody that has been learning, trying to get better, right? This was actually recorded. This will be a part of a new playlist that I'm going to start off with you guys, a little intro to SMC, and we'll kind of get that organize and get that out for you guys. But again, I appreciate everybody that is here, everybody who has been going with me, right? Utilizing patience, getting into these trades, missing trades with me, right? As we're posting things, because this happens sometimes. There
We
are
love
certain
you too,
scenarios.
family.
I appreciate you, dog, but there are certain scenarios, man, where I'll wait for everything to come into place and then I'll miss it. That's fine, man. I waited for everything to happen. Oh well, I missed it. Let's move on to the next one, right? And that's where it will be frustrating in those certain points. But again, thank you everybody who had popped out. It's a Sunday night. This already shows that you guys are going to be above the rest, right? The fact that you're even here listening to this right now shows that you guys are going to be above the rest. So again, I appreciate and applaud every single one of you, and I hope you guys have a great rest of your day and or night. Um, Feel free to ask any questions right now, and I will go ahead and end this in 60 seconds.